Welcome to Passive Money. This is your host CJ, and today we're going to be talking about crypto investing. Should you hodl or should you day trade? Now, for this particular contest, day trading and swing trading is going to be considered the same thing. Both include buying low and selling high without holding for a very, very long time. So, swing trading could be in a matter of days, it could be a matter of weeks, but usually you try to catch it low and sell it high. Now, we do have people that believe that in the long run, whether you are hodling or you are day trading, swing trading as the case may be, that it all evens out to the same. I do agree to that somehow. However, let's look at the big picture, break this down in details, and see how each of them kind of turn out in the grand scheme of things. So, with hodling, the whole idea is that you buy and you hold. You give it 5 years, you give it 10 years, you just buy and hold on. Hold on and hold on and wait for the coin to go, thousands of percentages up. Now, for those that were around crypto back in 2013 when Bitcoin was around $100, if you had bought Bitcoin at that time and held on till now, which is we're now in September of 2021, Bitcoin is now 45,000 plus, you would have made some substantial gains. Now, that's the good side of hodling. There's also the bad side. The bad side is that there are some coins that would never make it. Some coins would come out, they might rally, make some money, but then go down and disappear. I've bought coins like that. I've bought coins that went up, all good, all happy. It did like 2,000, 3,000%. We held on, and it has went from the 3,000% down to zero. I mean, in some cases, my $300 or $200 investment went from $200 to less than $1. So, hodling has its downside. That you hodl does not guarantee that you are gonna make money in the long run. 5 years down the line, there's some coins that were out back in 2015 that has disappeared right now. There's coins that were out in 2017 that are gone with the wind. Zero. The investment is gone. So hodling definitely has its dark side. Now, let's look at swing trading. With swing trading, this just means that you buy low and you sell high. Now, definitely for you to day trade or swing trade, you definitely have to have the time for it. You have to be on top of crypto news. You have to be researching. You have to have some experience with when to buy and when to sell. But let's just assume that you have that time to study the market. Of course, nobody can ever tell you they know when any coin gets to the bottom or when it reaches the max. So you could buy and sell and it continues going up. Let's take Dogecoin for example. Back in January, Dogecoin was 0.008. That's January this year. In April, Dogecoin hit 75 cents. Now, if you had bought 1 million Dogecoins in January when it was 0.008, you would have spent $8,000 at that time. The same 1 million coins, when it reached 75 cents, turned into $750,000. Now, since then, Dogecoin has pulled back. Some of the people that bought and were hodling, their investment in Dogecoin went all the way from the 75 cents high all the way down to, I think it fell all the way down to 16 cents. 16 or 17 cents. But let's just go with 17. So with this example, had it been that you purchased this in January when it was 0.008 and you held it till April when it went to 75 cents, you would have had 750,000. Now, let's just assume that you sold at the top, at the max, the 75 cents. And then you waited for it to pull back and you bought in again. Keep in mind, swing trading doesn't mean that you're out of that coin. It means that you took profit. So if you had bought back again when it was 17 cents, you would have spent 170,000 to buy back the million that you sold. However, you would have pocketed gains of approximately $580,000. Now, $580,000, it's now down to 17 cents. You buy back again with 170,000. You still have 1 million Dogecoins. You are ready for another upward movement. The person that's hodling is still holding their Dogecoin, going through the hula hoops of ups and downs, not taking any profit, but at the same time, they are still holding their million. So looking at these two scenarios, you can see that it's definitely better for you to swing trade. Now, swing trade, of course, might hurt the coin in the short run, but guess what? You are in this for you. We're not talking about the community, we're just talking about you as an individual. What's best for you? So if you had swing traded with Dogecoin, and let's just say you got it in January and you sold it in April, you would have had, and then bought it back when you hit the down all-time low of 17 cents again, after the pullback, you would have pocketed 580,000. You would have bought back at 17 cents, which would cost you 170,000, and still have your 1 million Dogecoins. And this is just for instance, maybe you bought back when it was 25 cents. Maybe you bought back when it was 30 cents. You're still pocketing at least a good 300,000. So the case and point here is that swing trading puts money in your pocket as the coin keeps going up and down. So every coin that goes up always has a pullback, and as a swing trader, you sell when you think is the peak, and then you get ready to buy back again. Now, swing trading does take patience. You cannot have FOMO as a strategy. You cannot. You have to be patient to see it get to that ultimate bottom. And of course, you are not going to be sure whether it's the bottom or not, but at least you will give it that chance to go all the way down, and of course follow the ride up. The ride up might not be immediate, but definitely if you're doing this with a coin that has some sort of stability, high market capitalization, you could be sure that at least there's a big chance the coin is not gonna disappear on you. Now, there's also another side to swing trading, and this is where people claim that, oh, you could have sold this if you bought it at 0.008. I'm still taking Dogecoin for instance, and when it got to 45 cents, you sold it thinking it has got to the high and it would now continue going up. Yes, I have people that sold their Dogecoin when it was 45 cents. I actually sold mine during that run when it was 55 cents. I didn't wait to the 75 cents. I sold it at 55. But guess what? I still took some profit. And it still later fell all the way down to 17 cents. So yes, you might not catch the top. Yes, you might miss out on some. Yes, it's even possible that it may not pull back again all the way down to where you sold it, and you would now miss out on the new highs that it will gain. But the bottom line is you did not lose. You took profit, and although you couldn't buy back into it because it kept going up, you still made some decent gains. So looking at this too, should you hodl or should you swing trade? Should you day trade? I would definitely choose to swing trade instead of hodling. I would choose swing trade because there's definitely that opportunity to make money along the way. If you do your research well, follow the trends, you will be able to see that every coin that goes up always has a pullback. It might not be a big pullback, but it always does have some kind of retracement that you can capitalize on if you had sold it at a higher number to buy back in. So this is just my opinion. If you found any value in this, please like and subscribe. If you have any comments, please feel free to make the comments. If you believe that hodling is better in the long run, definitely hodl. Now at the end of the day, there's a big chance that the case of both of them landing you around the same if you hodled or if you are swing trading, it might be true. But if you're swing trading, there's more chances that you would take profit along the line. And taking that profit along the line ensures that if at any point maybe the coin disappears, you still made some profit. You didn't totally take a loss. And everybody is not going to be able to buy Bitcoin because we all know Bitcoin has made a huge move. There's other altcoins that you could use to do your swing trading and still be safe in the sense that you wouldn't lose your investment whether you choose to hodl or whether you choose to swing trade. However, swing trading, like I said, puts money in your pocket along the way if you do your research well. Guys, thank you for watching. Please like, subscribe, and hit the notification bell if you've not done so. I look forward to the next set of crypto millionaires and see you on the flip side.